Hello and welcome to Explain the Charts, your channel for no-nonsense technical analysis and market insights. Today is September 26th, 2025, and we are taking a deep dive into Meta platforms, symbol Meta. We'll cover the crucial news swirling around the company and then break down what the charts are telling us about its next potential move. Right now, we're looking at the daily chart, which shows a powerful uptrend throughout most of 2025, but also a significant recent pullback that has traders on edge. Before we get into the technicals, let's discuss the fundamental landscape because it's quite busy for Meta right now. The company recently held its Meta Connect conference on September 17th, an event that often serves as a catalyst for the stock. Alongside that, we've seen positive developments like a favorable EU court ruling on September 10th, which reduces regulatory cost pressures, and a new $100 million AI partnership with Black Forest Labs to bolster its metaverse ambitions. Just yesterday, news also broke about the launch of Oakley Meta Vanguard AI sports glasses, showing their continued push into hardware. However, the stock has been struggling to gain traction, consolidating around the $755 level for weeks before this most recent drop. Let's zoom in on the daily chart to see how this news correlates with the price action, specifically from August onwards. We can see the stock hitting its 52-week high of $796.25 on August 15th, following a period of strong optimism partly fueled by stellar Q2 earnings and analyst upgrades, with some targets as high as $810. Following that peak, the stock entered a period of consolidation, trading mostly between $750 and $780. Notice the price action around the Meta Connect conference on September 17th. Despite the hype, the stock didn't break out and instead showed weakness, which was an early warning sign. The price has since broken below that key consolidation area, indicating a shift in momentum from sideways to down. The broader context on this daily chart shows a clear, rising channel that has been in place since May. The recent pullback has brought the price down from the upper boundary of this channel, and it is now approaching a critical test of the lower boundary. That lower trendline support comes in right around the $736 to $740 zone, a level that was also highlighted as key support in recent financial news. A bounce from this level would keep the long-term bullish structure intact. However, a decisive break below this channel would be a significant bearish development, suggesting the multi-month uptrend is over. The primary resistance level to watch on any bounce is now the former support zone around $755. This area acted as a floor for the price throughout late August and early September. What was once support has now likely become resistance, and bulls will need to reclaim this level to regain control. Above that, the next major resistance cluster is between $780 and the all-time high of $796.25. Conversely, the immediate support is the low from yesterday's session, right around the $744.50 mark. Now, let's switch to the hourly chart to get a clearer picture of this recent downtrend over the past couple of weeks. Here we can see a series of lower highs and lower lows, which is the definition of a short-term bearish trend. The price attempted to rally on September 18th, but was rejected sharply from the $788 level. Since September 19th, the selling pressure has been consistent, pushing the stock down through several support levels. The volume on these down moves has been notable, suggesting conviction from the sellers. Looking at the last few days on this hourly chart, we can see the breakdown from the $755 level happened on September 23rd. The price then accelerated to the downside, finding a temporary bottom yesterday, September 25th. Any short-term rally will likely face resistance near the previous breakdown point of $755. For traders, this level is a key area to watch for potential short entries if the price shows weakness there. A break above it on strong volume, however, would be the first sign that this short-term downtrend is losing steam. Let's drill down even further to the 15-minute chart to analyze the price action from yesterday and today's pre-market. Yesterday's session was characterized by a sharp drop in the afternoon, from a high of around $756 down to the low of $744.55. This was a significant intraday move that broke through the psychological $750 level. The price then spent the rest of the session attempting to recover, but struggled to make significant headway. This shows that sellers were in control for most of the day. For day traders looking at this 15-minute chart, the key battleground is clear. The low at $744.55 is the line in the sand for the bulls. A break below this level today would open the door for a test of the major daily support around $736. On the upside, the first level of resistance to watch is the afternoon consolidation area from yesterday, around $749 to $750. A move back above $750 could give bulls some confidence for a pushback towards the $755 breakdown level. So, let's go back to the daily chart and recap everything to build our trading plan. The long-term picture remains bullish as long as the price stays within the rising channel that started in May. However, the short-term picture is decidedly bearish after breaking down from the key $755 consolidation zone. We are at a critical inflection point where the short-term downtrend is meeting the long-term uptrend support. The outcome of this battle will likely set the tone for the coming weeks. Let's summarize the key price levels one more time. Critical long-term support is at the lower boundary of the channel, around $736. Immediate short-term support is yesterday's low at $744.55. On the resistance side, the first major hurdle is reclaiming the $755 level. Above that, the next significant resistance is the $780 to $790 zone, and ultimately, the all-time high at $796.25. Now for some unbiased predictions and their likelihood. The bullish scenario involves the price holding above the $744 support and bouncing off the lower channel trendline near $736. If this happens, it could be seen as a successful test and a buying opportunity for a move back towards $780. I would place the probability of this scenario at around 50%, reinforced by positive fundamental news like AI partnerships and strong past earnings. Confirmation would be a decisive break and hold back above $755. The bearish scenario involves a failure to hold the $744 support, leading to a break of the long-term rising channel below $736. This would be a significant technical breakdown and could trigger a deeper correction towards the $700 level. Given the current market uncertainty and the recent weakness in the stock, I would also place the probability of this scenario at around 50%. Confirmation would be a daily close below $736 with increased volume. Things to watch for that could influence this are broader market sentiment and any upcoming news regarding the costs of Meta's AI and metaverse ventures. In conclusion, Meta is at a pivotal point. The conflict between the strong long-term trend and the weak short-term price action makes this a trader's market. Watch these levels closely and wait for confirmation before committing to a direction. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Meta in the comments below.